Welcome back to Squawk Box. Rick Santelli here live at CME HQ with the breaking news on this Thursday morning. Post 25 basis point rate cut by the Fed, third consecutive one. Initial jobless claims for the week of December 6th. Well, we're expecting a number around 220,000. It has been extremely well behaved. I still don't see it on the wires. We'll go to the trade balance next. Trade balance minus $52.8 billion. That's a better, lower trade deficit than we expected. We were looking for a number closer to $62 billion, and that follows a revised minus $59 billion. Minus $52 billion would be the lightest going back to, wow, we're really going back. Well, my records go back to 1992, and to find a smaller number than minus $52 billion, we're all the way back to June of 2020. 236,000 is initial jobless claims. So the 191 that was in the rearview mirror, obviously the seasonal adjustments didn't do a very good job. It was only slightly revised, though, to 192. Now we jump to 236,000. 236,000 would be the biggest, going back to 264,000. That was September 5th of 2025, the first week of September of this year. And on continuing claims, 1,838,000. 1,838,000. That is about 100,000 less than we were looking for. That is an unbelievable drop in that number. Last month was 1,937,000. The final lower number to 1.838, we're going back to, wow, we're going back to April of 25. April of 25. It seemed like a lifetime ago, doesn't it? Now, couple of things I want to point out. First of all, on the trade balance, pre-COVID, the biggest trade balance we had was minus $68 billion. In March of this year, we were at minus $136 billion. So the progress we have made is rather substantial considering, and it was done by a good thing. Exports were multiples higher than imports. That's the way you want to lower a trade deficit. And in terms of jobless claims, everyone probably rightfully will point to the Thanksgiving holiday, day off, shorter work week as being the glitch in the system. But as I pointed out many times, seasonal adjustments are supposed to compensate. One final thought. Interest rates today, they're a bit lower. But consider, before any easing, if you go back to the night before the September 18th, 2024, beginning of this easing cycle with a 50 basis point cut, a 10-year note was at 365. Today, after 175 basis points of easing, it's at 414.